Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at SPY on the daily and weekly time frame, so a big bearish start to the day, a gap down open, an all-out dump, but look where we bounced yet again, the daily middle Bollinger Band, 226.87, just like we have been bouncing off this level all of 2017. And 6 of the last 7 times we have bounced off of this level, it has led to a higher high the next day at some point. So that would mean that tomorrow we see a break of 228.37, 6 out of the last 7 times. Pretty good odds to see continuation. But it's just another higher low in this pattern. Losing and closing below the middle Bollinger Band will be a red flag, but obviously that has not occurred. And that's the level that the bulls have chosen to defend over the past month. So support is down at 226.41. Whatever that middle Bollinger Band is tomorrow, it's going to be just below 227. And the higher low pattern very much intact. The weekly time frame still holding exponential support, currently fitting within last week's range. And not a ton to see here on the weekly time frame besides exponential support, but that will only be a factor if we lose the daily middle Bollinger Band, which so far has been a brick wall of support. So let's look at the 5-minute time frame. We saw the weakness right out of the gate with an all-out dump. And we were using the exponential moving averages. This is why I like them so much on the shorter term time frames. I like them on all time frames. Whenever there's a really strong trend, it's a great guide. And they also act as a guide on patterns. So we had a weak bounce attempt, decrease in bull volume. And we're wondering, okay, is this an oversold bounce with the RSI so low down at 12, 13? Or is it a bear flag? And a bear flag leads to continuation to the downside. Well, if the bulls can't get over this exponential moving average resistance on the 5-minute, then it's going to be a bear flag more likely than not. It would require the bulls to get over the exponential resistance in order to negate the possibility of it being a bear flag. So that did not occur. We dropped down, hit a new low. Same thing, bounce attempt, decreasing bull volume, reject from exponential resistance, another leg to the downside. So 2 bear flags on the 5-minute time frame. And then what stood out here when the bounce became underway, the low of the day was set. The next candlestick, 2 candlesticks later, closes above the exponential resistance for the first time today, and then from there we form higher lows and higher highs. Had a bit of a fake out here. We came really close to breaking support. We had the consolidation low of 226.75, and we did dip down to 226.71, but the bulls bought that dip, and then we rallied at the end of the day. So I must admit, personally, I was not confident in this SPY bounce due to our positioning on the hourly time frame. It was a weak bounce. We were rejecting from exponential week or hourly resistance, but then that move at the end of the day really solidified the strength of the bounce with the high volume and getting over a lot of moving average resistance on the hourly time frame. So the question tomorrow is going to be, can the bulls confirm this reversal candlestick? We have a gap to the upside from the gap down open today. That will fill at 228.76. And again, as long as the bulls keep holding that middle Bollinger Band, they are in the bullish Bollinger Band channel on the daily time frame and very strong. So we'll check back in tomorrow and see what kind of follow through we get. I appreciate you watching and hope you have a great night.